Alrighty, traders, good morning, good afternoon, and welcome to the session today. I want to go ahead and let everyone know that we are ready to rock and roll. Me and Chris Pulver here. Chris, are you in the house?
Yes, sir. I don't know if you're going to be able to spit my name out.
Dude, I'm struggling this morning. I do apologize for that. I don't know if I should call you Rocky Balboa or just Chris Pulver, but in any case, we're rocking and rolling today. Chris, why don't you go ahead and do an introduction? I'm going to go ahead and get things set up on my end here before we get started.
Okay, sounds good. Everybody can see my screen. Type in a wire. Yes, you can confirm, please. It says major market movers, non-farm and CAD employment. That's what we're dealing with this morning. All right, nice to see everybody. And big room today. Thanks for coming out. And it's going to be hopefully it's been a great week. I just closed up some profit on the Euro New Zealand for plus 99 pips. It's a group position we had in our flex trade room. I'm also looking at protecting some CAD Swiss profit, currently up about 122 pips going into the morning, this morning's news. So we'll talk about that. Let me go ahead and bring up the live chart, just talk about a couple of things. First off, this was the anticipated move yesterday. We did expect, with a little bit of quiet, a little bit of silence coming from US and China. Looks like trade talks are going to continue in October. That's a good thing for the market. Central banks are accommodative. That's a good thing for the market. And Boris Johnson's losing power in the UK. That's a good thing for the market. So we had a pretty big close yesterday. This is the S&P 500 or the SPY, and we had a 1+% close above this little nasty range that was the sell-off from end of July, early August. So this is a reason why we saw such weakness on the Japanese yen and such weakness on the Swiss franc. Also, we're starting to see some weakness in the dollar as we saw, we saw a new low on the euro dollar like Sunday, Monday, and then that was the bottom. And then we've seen a new high in the dollar index, and that started to be more of a top. So breaking out here, I think even if we have an indecision day on the S&P, I'm still looking for this to go higher. And there's going to be lots of celebration out there if we see new historical highs again on the S&P. And we talked about this a lot this week in the trading room. You know, I think this is the Q3, Q4 drift and melt up that will continue, and it might be a great show. You know, from the start of the year to the end of the year, we might be up 25, 30% in the S&P. But the reality is, you know, this is all because of a continued expansionary cycle for the global economy. I think this all probably ends badly, but not now. I don't think this is anywhere close to this move happening yet. I think we're going to deal with, you know, maybe some more volatility, maybe some more indecision, maybe we have more of a melt up. But I think right now the trajectory is still looking more optimistic to the upside. So what does that mean for us today as traders? Well, we've got CAD news and we have dollar news, so we're going to be watching a little bit of everything. But dollar index, this was that high that we started the week off with. So we had a previous high from FOMC in July. This was end of July, like July 31st and August 1st, and then we scored another point right here for the bulls. But what I'm looking for, Gary and I were talking just a little bit this morning before the session started, and you know, look, I think that this level of resistance can become support. We can have a little push to the downside, but part of me would almost welcome, well, it's either finish this move to the downside here and, you know, maybe a little bit of a bounce, or maybe we pull back first and then go lower. But either way, you know, in the near term, you know, I'm not saying today necessarily we're going to try to trade just the news today, but in the near term, I'm still looking for some dollar weakness to prevail. So we might have today's announcement be somewhat noisy. The forecasted jobs, let's go ahead and take a look at the calendar really quickly. So the forecasted job is 163,000. The unemployment rate is expected to stay the same at 3.7. That was last month's print as well. The one figure we're going to watch really closely is average hourly earnings. All right. So average hourly earnings tends to be the sneaky kind of under the radar indicator that we want to keep an eye on, because if we have more jobs and we have, you know, lower or the same unemployment, which under 4% is considered very low unemployment. But if we have average earnings that are less, if we're missing on that number, it just shows that less people, less consumers, right? We're not buying as much. We're not having as much money to buy. And the U.S. is predominantly a consumer nation. So that's always a big figure there. And, you know, depending on what the numbers are today, this will also be hinting towards the Fed's decision in 2 weeks from now. Next week is going to be the European Central Bank. The week after that is going to be a trifecta with the Fed rate decision, the Swiss franc rate decision, and the pound rate decision. So we still have a lot of news here in September through central banks. But we'll keep an eye on this for the numbers. We've seen steady job numbers the entire year. I mean, I'm not really paying attention too much to the job numbers because even if it's like, 150 or 125, that's still adequate. It would have to be less than 100K for me to say, okay, that's a pretty significant miss. But more importantly, is going to be the average hourly earnings. If we miss on earnings, I think that's going to continue to push the dollar lower. So I'm going to actually set up a chart, a couple of charts. And Gary, feel free to chime in when you want to. I know Gary's been up since the crack of dawn, getting ready for today's session.
Yes, I have. Thank you very much. I'm just still trying to get the copyright here. I'm going to make a couple of changes, but just to go ahead and just confirm what Chris was saying, if we go ahead and take a look at the chart, well, at least the calendar right here. Trump went ahead and tweeted last night. He tweeted that the ADP numbers came out good, and he said jobs look great because we had 195K reported. But of course, it's going to come back down to the unemployment rate and, more importantly, the average earnings that's going to take place this morning as well. We're going to take a look and see exactly what the details are, but that's going to be the big deciding factor when the Feds look at the data to decide on whether or not they should continue with the rate cuts or going to go ahead and hold it to where they have it right now. So that's going to be interesting. Chris has covered the data coming out next week. That's also important, but also taking a look at the dollar index chart right here. You can see the dollar index chart is also sitting at a very nice resistance level. But I spoke about a video yesterday, or at least I spoke in a video yesterday about the dollar index, and I said that there's a possibility that we could get a little bit of a rally in today's trading. And so the news may be reported good. We may see a bit of a rally, but me and Chris were chatting about this a little bit early on. And the one thing that we both on the same page about is that even though we had the news come out yesterday, we didn't really have a major move in the dollar. And so with that being the case, do we really expect to see a big move in today's trading? I don't think so. I may be wrong, but I don't think so. Now, if we do see a little bit of a move in the dollar and we do see some recovery, that would be something that obviously the market would enjoy, but it's not something that I'm going to lose sleep about, because I've already anticipated that if we do see a rally in the dollar, it's not going to be long-lived. It's going to be very short-lived, and I think that's going to be the opportunity the traders are going to be able to get in on new positions. And we can go ahead and take a look at pairs like the US dollar, the pound US dollar. All of those pairs trade against the dollar. They certainly will go ahead and give us trading opportunities. What do you think about that, Sir Chris?
Yeah, I agree. I mean, I think that non-farm payroll as a whole is not the type of announcement that it used to be. We might see a 50 to 100 pip move today. I'm not expecting a ton of follow through. I mean, we've had a pretty generous week as far as movement goes. If I quickly show the currency strength chart, I mean, with everything kind of flipped with U.S. and China, and looks like negotiation talks are looking to resume in October. I think the market is really liking that, so that's why you're seeing a recovery and strength in the New Zealand, recovery in the Aussie. The pound has had a pretty good week. It's had a great week since the low off of Boris Johnson has suffered some defeat. It looks like he can't do anything as far as a no deal without having some type of delay, which is, I think, a great thing for the pound, at least in the short term. I still want to limit exposure all in all. I did close up pound Swiss at 2,200 for a break even. I'm looking at euro pound to close up anytime here in the next maybe 30 to 50 pips for some profit. And pound dollar, I'm going to let that run a little bit longer. But I'm definitely liking the Swiss franc weakness. But I think the Aussie New Zealand are going to make one of the quickest recoveries against the dollar. And again, I mean, this has been long anticipated. I mean, you and I have been staring at this pattern on the dollar index for what? 8 months, 9 months, the entire year. I mean, we've been planning something more significant on the dollar, and it's just a matter of what are the driving factors and the fundamentals that will actually start to tilt it in our favor. And I think that a more dovish Fed or a more accommodative Fed, like all the central banks are being right now, I think that's what's going to start turning this over and allowing the market to price in dollar weakness. So that chart right there, I love that chart on Aussie dollar.
Well, this is the thing that I pulled up right here. I'm going to show you a full chart right here. This is the Aussie US dollar chart right here. It's a weekly time frame. What I'm excited about right here, and if you look at most of the pairs except for the euro US dollar, right? The euro US dollar right now showed a little indecision candle. And so the indecision candle doesn't give me too much confidence that we're going to see a rally in the euro dollar. That's because we've seen so much weakness in the euro over the last week. But the rest of the dollar pairs that we've seen this type of setup right here, where we've got the market actually going back and retesting the backside of this resistance level. We need to break through that. So this is going to be a key factor in today's trading. Do we break through that, or does the market do something like this, where we have a little bit of a test down and then a breakthrough? Because we definitely get into, or at least looking to trade towards the top right here. This is a beautiful closing candle. If we close after the week, that'll give us a nice support level there for the week, and then a continuation rally in next week's trading. If I go to the 1 hour time frame, which will give us a little bit more of an idea of what the market's doing in the short term. And if you take a look over here, you can see that there's definitely a lot of real estate down here where the market can come back and retest the wave tunnel right here. I know that this is definitely a key support level for the market once it comes back down, but that's going to be an opportunity. Trust me, we talk about this in our trading room. When the price moves down and price moves down from from this level right here, goes through our signal lines, and then gets to our wave tunnel right here, then the wave tunnel is going to certainly go ahead and create some support there, and then we're going to see the market go ahead and continue to rally back up again. So with that being the case, we're definitely looking for dollar to weaken. Look, I want dollar to weaken. There's no doubt, because I've got some of my pairs that are currently positioned where I have to get some sort of correction in it. And if I'm not going to get the correction in it because of dollar strength, then I'm going to be sitting in these pairs for a little bit longer. So I know that I'm definitely I'm looking for weak data coming out in the US dollar. But I know for a fact that based on the data, based on the technicals, we could possibly, there's a very high possibility that dollar is going to strengthen today, but it's not going to be long term. It's going to be short term. And that's going to be key for us to continue to trade with the trades we have right here. And this is the Aussie US dollar. We have other pairs like Euro US dollar. If I'll go ahead and flip that one open too. That's the one that's not so great, but let's just go ahead and show you what it looks like. Euro US dollar right here. And I'm just going to pop open the weekly. This is what the weekly looks like. It doesn't look too bad. I mean, this shows you a little indecision right there. I like the weekly, but then the daily candle, that pretty much sucks right now. Look at the daily right here. I'm going to zoom in a little bit more, and you can see the daily. The daily's got that big indecision candle right here, and that's not very cool right there with that indecision. So if we want to do anything, it's got to come back up again. Any sort of correction, well, again, this level, this downward trend line that's seen right here, I'd like to see that pair trade up above that in order for the market to continue with an upside rally. But overall, definitely in the short term, some slight dollar strength today, and then positioning us for next week so we can start looking to go ahead and take the opportunity. So I don't know, Chris, do you have something that you want to go ahead and start preparing right now for a trading opportunity, or is it, or are you just looking for swing trading right now?
No, I would like to, I'm going to see if I can get the micro price detector to work a little bit this morning. Like
Okay.
I said, I think that's maybe 50 to 100 pips worth of movement. Let's quickly just go ahead and check the daily trading ranges and see what's already happened on the day. I'm just going to go to the 1 hour chart. This is, and look, traders, I know that we have, Gary showing a little bit of a live stream through his webcam. So hopefully you can see that as you're watching this, as you're viewing this session, there should be a webcam version that Gary has his big screen on. If you can actually, expand that with just using your arrows on the side of that webcam and make it bigger so it comes in better resolution. And then I'm doing a screen share on my computer with the chart. So, yep, he's streaming right now. Are you streaming this live on YouTube, Gary?
Actually, no, not streaming live on YouTube, just recording this right now. But what
Okay.
we'll do is when we're done with this, I'm going to go ahead and edit, put everything together, so we'll be able to have this available for everyone once it's done in one solid stream.
Perfect. Okay. So I'm going to have the 1 hour candlestick charts up. What I'm also going to do is go back into, I have a micro price detector news workspace that I work with, and that will just be setting up some trades on the dollar. So I have this MPD, that's micro price detector news master, and I'm going to look to get this set up on 10 pip box sizes. and I want to look at some daily trading ranges to see where the price is at. Now, a lot of times coming into non-farm, we usually don't see a ton of volatility on the dollar pairs heading into non-farm. Again, look at your currency strength chart. This thing updates every 5 minutes. The dollar is sitting right in the middle. And you can see from yesterday at 5 p.m. all the way to now, this dollar has had very little fluctuation. So outside of the Aussie and the New Zealand getting stronger around 3 a.m. during the London session open and the Swiss getting weaker, the dollar's pretty much been stable all day. So I'm going to get this set up, Gary, on my end. This is the micro price detector. I'm going to try to set this up using chart settings. We're going to go into the general tab and set this up with a fixed 10. So this should be good from probably the last session that we did. Might have been a pound announcement or something else. Oh, fudge. Looks like this is already time to take trades. Okay, well, I guess my script's already ready to run. All right, thanks, Smart Trader. It knew what I was going to do. So it's already running my script. So let me double check my settings on all these to make sure that my charts are 10 pip box sizes. So this Aussie dollar is fixed 10 pips. The Euro dollar is fixed 10 pips. So I'm just going to double check all this on my end. And if that's good to go, then we have about 12 minutes before the news. And all I'm looking for is on a net position. I'll also be running this with my broker platform. And I'm going to keep a close eye on this, where my net positions are at as those trades take place. So I'll be watching. I have a micro price detector account. It's a smaller account, but I just trade the news on this one. And if any time I can get 30, 40, 50 pips or more, then I'm pretty happy making some short-term pips in the news days.
Okay, so Chris, while you're busy setting that up, everyone, just want to go ahead and just ask a couple of questions right here. How's the broadcast coming through? Again, like Chris said, you can go ahead and split the screens into two, or you can drag the screen over and see more of Chris or see more of mine, depending on which one you want to do. Good. Everyone says Jacob says it's coming out through. Good. All right. Good, says Steve. Fine, says Leslie. All right. Good stuff. And if I show the screen, my chart right now, that should be also pretty clear right there. You should be able to see that clear. You can see Chris's screen clear. Fantastic. Good. Steve says, great concept, Gary. All right. Fantastic. Good. Looks good. Sorry. Carl says I'm late. Are you kidding me? Carl's walking the dog. All right. Cool. Well, Carl, glad to see you here, buddy. All right. Good. Well, traders, good. We have, okay, so we've spoken about the dollar. We think the dollar is going to strengthen a little bit today. The data is going to report what we saw yesterday in ADP numbers. ADP numbers came out positive, 194 and 195K. So expecting some rally in today's trading. I want to go ahead and pop into another chart, the pound US dollar, and take a look at how the pound US dollar is set up also. In fact, I'm going to go ahead and open up, let's do the weekly on the pound US dollar, and we're going to do the weekly on all the other crosses against the US dollar. Now, I don't know if you got my video this week on Monday. Maybe some of you got the video, but you're like, I don't believe this big dog. But I sent out a video last week, and in the video, it was all about the pound. I said, has the pound or the British pound hit bottom yet? And then I went ahead and I showed you all the technical analysis. I said, hey, this is why I'm thinking this. Forget about Boris Johnson. Forget about what's going on with Brexit. Just look at the technicals right now. There was a lot of reason to anticipate a bounce off pound. And what happened? Boom! We got a bounce off pound. So we got the bounce that we needed. Here is the pound US dollar chart right here. And you can see on the pound US dollar chart, the bounce took place right here. I actually love this chart the most, because we not only had a bounce right here, this is the one we actually got in. And if you recall our prediction, we spoke about price moving all the way to 125.55. Remember, that's the number we called on Friday. Now, 125 is actually the target on what we're referring to as the fifth wave. So although we got a nice little bounce right here, a little test of the lows down there as the market dropped back down, we're looking for 125, and let's go to the chart right here on a 1 hour time frame. And I'm going to pull it across right here. And oh, actually, you know what? My bad. I'm going to go to the 8 hour, because we actually pulled up the 8 hour. By the way, Chris, I used the SSL for this trade prediction right here.
Did you?
Yes, we did. And that was it right here. This is where we decided to get in on that candle. Can everyone remember this? If you watched the video, if you haven't, make sure you go ahead and in the link there's my YouTube channel link. Go ahead and subscribe to the channel. Check it out. We spoke about the entry point right here. This is the entry point. We decided to go buy there, and the price was at 20.90, right? The price was 20.90. I got a little bit lower than that. We placed a stop loss down here, and we're chasing after this as our third target. Here is our fifth target right here. Now, what is third and fifth? Well, I'm referring to waves. Wave 3 is here on this SSL, and wave 5 is here. So 125.67, that's the target we're looking for right here. Call it 125.55. But this is going to be our, at least our short-term target, 124 and change. What is that? 124.60, right about there. Yep. So we're currently right now on the SSL, on the 8-hour, we're bullish. We're bullish. And if there's going to be some sort of correction right here, I know that we can stay bullish on the SSL because we have to take out this low in order for, at least that close, not low, but that close, in order for this to be bearish. So I don't foresee the market coming all the way back to my entry point before rallying up to this level. So we're definitely still holding bullish on pound US dollar. And even if we do have a small correction today, it's not going to be as threatening as to change the directional bias that we have right now based off this 8-hour chart. So yeah, we're good. How you doing that side with the MPD there, Chris?
Good. I'm just going to send a screenshot out. I'm going to post this as a hyperlink. So it's faint. It's faint because I'm already running the script, but I hope you can read this. If everyone can see it on my screen, I'm just going to send this out as a hyperlink. So just to recap, for if you have micro price detector auto, that's a smart script. If you have that, I'm running this with a 10 pip box size. I'm using 1 brick in, 1 brick out. Change your trade size to what you want to trade. I am going to add to it if it loses, and I'll take up to 5 losses. But I'm going to deploy this with 1 brick in, 1 brick out with a box size of 10. So I'm going to go ahead and send this out in the chat as a hyperlink. And that way you can get it set up if you want to do it the same way that I am. So this should pop up here in just a second. There it is. And like I said, I know it's faded because I'm actually taking the screenshot from my live chart. So this is the MPD auto. There's the hyperlink for you. And I'll post this in the question box as well, MPD auto. There you go. All right, so back to the charts. So everything is up and running. I double checked. I've got the right settings for my bricks. I've got the right settings for my account, my trade size. And let's go, man. We've got 6 minutes for the news. Let's see if we can grab a few pips. I will come back to this workspace in just a moment. Do you recommend closing positions prior to the announcement? Kevin asking about 6-figure max pairs. Not necessarily. I mean, like Gary and I are talking about, we probably will have today's news. So think of it this way. Both Gary and I are thinking that dollar weakness is coming in the near term, medium term. Okay. Now to see that happen today, if you isolate today might be a strong move in the dollar, right? Today might be Aussie dollar's gone up. What? How many pips has the Aussie dollar gone up in the last 48 hours or the last 3 days? We've seen daily chart. We've seen 4 days in a row that's been bullish from the double and triple bottoms there. We've gone up 150 pips straight up on the Aussie dollar. Just from a technical standpoint, today's news might show a stronger dollar, and it might just be a dip, or it might offer the buying opportunity. So for something like 6-figure max, if it offers the dip, that allows the pullbacks to be taken. That allows those retracements to be filled. So I'm fine just kind of leaving the robots running. I mean, we talked about this yesterday. We had a great class in 6-figure max yesterday. Dollar pairs, yen pairs. I'm letting the robots run. And fingers crossed that we actually have some decent movement. We've been waiting for a solid 3-4 weeks for some breakouts, and this week is looking a lot more promising for some decent breakouts. So I'm letting the robot run. I'm trading it small. I'm letting the robot here run for the news today. Going to try to grab 30, 40, 50 pips if we have decent reactions. Great. If it's something we trade for a couple of hours, so be it. If it's a nasty day and it's a noisy day, then okay, fine. This isn't going to make or break my week. I just closed up for 100 pips on Euro New Zealand. I just closed up. I actually did close my CAD Swiss at 120 pips. So I bank profits for the week. I'm sitting on $70,000 in the Aussie New Zealand. So there's not really a lot of things that could happen that would make me upset as a trader. So that's a good thing. But yeah, I mean, as far as what I'm doing this morning, robots are fine. Let them run. I think dollar is just going to be a little bit of noise today. The good thing is, Gary, what are your thoughts on a weaker dollar? As far as like if the news comes out, job miss, earnings miss, and Aussie dollar jumps up to 69.20, 69.50. I mean, we still want to look and see what the daily trading ranges are. If we end up hitting those or exceeding those daily trading ranges, then we might want to book some profits in the short term on some of those dollar pairs.
Sure, absolutely. And I definitely look at, I've looked at the dollar index chart right here, and I've used the SSL to go ahead and plot it open. And I'm looking at the SSL, and the SSL showing bearish as well. So again, if we do get some dollar weakness, I'm excited about it because that's actually where the trend's at right now. The trend is bearish. So I'm preparing myself for a bit of dollar strength today, just in case it does happen, and there's a high probability it could because of the data that's been reported. Again, it's all going to come down to the ADP numbers came out great. Trump went in and tweeted, "We're good with jobs." But the problem here is the jobs is not the only thing that the central bank is going to take a look at in order to make decisions as to how they're going to deal with the rate decision. The average earnings is what's key right here. And if we look at the average earnings, and this is what I'm going to keep an eye on this morning, and this is it right here. The average earnings is the essential data for me as to how the Fed's going to deal with this. And right now, the forecast is 0.3%. The unemployment rate, also a factor right here. If we start seeing that starting to drop, I don't think that's going to be good, even if we do have some good data coming out with the employment change. I don't know if that's going to be able to rule out any drop in the average earnings or the unemployment rate. So listen here, it's going to be exciting either way. And the most important thing about this, is how we deal with the trades, how we manage our position. And so if the market moves, look, I'm just going to be real about this. Many years ago, I used to trade non-farm payroll constantly. In fact, non-farm payroll used to be the only fundamental we used to trade. We used to make huge money from non-farm payroll, but it's not quite the same like it used to be. We used to have 170, 200 pip gaps in the market as soon as the data comes out, and we used to take advantage of that. But the problem is today, the brokers are protecting themselves. There's a lot of slippage involved. You don't really want to trade the breakout of the non-farm payroll. A lot of people struggle to get in. If the markets are going to really gap, you're going to struggle to get into that trade. We've got about 1 minute left, by the way, traders. But the real thing about trading any news is, or the best way to trade news is to really let the noise play out and then take the reaction after that. And that's what we're really going to look at right now. I know Chris has got some trades in right now that he's going to shoot some trades as the news comes out. We'll see how that plans out. And then we're going to go ahead and take a look. But we're not seeing big gaps in the market like we used to anymore. So maybe that's going to be okay for this time around. But we've got about 30 seconds left in the news before the news comes out. Yep, 30 seconds left. So it's going to be interesting to see how it plays out. I'm going to, as soon as the news comes out, I will go ahead and take a look and see exactly what's going on here on the chart with the calendar. See what reports. Let's see here what it reports. It's waiting at the moment right now, and it's there we go. We've got positive news out of the employment change, and we're certainly going to see some. Okay, the unemployment rate stayed unchanged. That's what that was expected. Oh, by the way, that was the employment change for Canada. And then we're looking over here, 130K. That was lower than expected. Whoa. That's lower than expected. Chris, what's happening to the market so far? I haven't got my eye on the market at the moment right now.
I'm just going to take a look. So 8:30. So the job came out 130 versus 160 expected. I'm trying to get a refresh on the average earnings.
Average earnings came out at 0.4, so that was up.
So it was actually
so
up.
That's
okay.
positive.
So it's going to be a mix, man. It's going to be tough. Like I said, it would have to be like less than 100K for me to think that the jobs are going to be less. So the average earnings, that's a tough one because I think that's always kind of the sneaky indicator that most traders forget to pay attention to. Again, does that justify the Fed holding rates? I don't know. I don't think so. I mean, if you think about where the Fed is, they're the only central bank that has consistently raised rates since last year. Between the Bank of Canada raised rates to 1.75, they're maintaining the job miss. Okay, the average hourly earnings. Okay, but what about pricing in a possible rate cut in September, October? I mean, really, the markets are looking at 2 rate cuts for the rest of the year, and some even say as much as 3. I don't think the Fed is going to be that aggressive on the easing, but they will probably cut rates either this month or next month, and then possibly again in December. So we are initially seeing dollar weakness hit the market. If I refresh this, it should be right at 830. This is going to be the initial reaction. CAD news is positive. So that's a fudge. That's a jump on that CAD Swiss. That would have been a nice little chunk of profit to protect. That sucks. But I think that stop loss would have spiked me out anyway. I had a stop loss right in there on CAD Swiss, but it's going our way. So if I've got any flex traders that are still holding CAD Swiss, you're now up about 140 pips or so, 130, 140 pips. So let that thing ride itself out. Aussie dollar is moving up, which is good. We want to try to hit 6,900 or higher on that one. So initial movement, dollar weaker, CAD stronger. Aussie New Zealand is starting to settle in a little bit, but they've been strong all morning. Let me refresh this currency strength chart again. And by when we have 8:35 a.m., this will be another little refresh. And we'll look for this orange line to be deeper to the downside and see if the CAD is getting stronger on the day as well.
Yeah, we're not seeing much happening here on the pound US dollar. Pound US dollar is pretty much nothing. Nothing, yeah. I tell you. Nothing happening there.
Not doing much. I mean, it's an indecision candle on a 15-minute chart. We're not seeing much of anything here. It looks like a bit of a mix because you have a weaker jobs report number, but you have a better average earnings. Like I said, it's Friday. I don't know, man. Non-farm is just
not the same.
It's a noise. It's a noisemaker now.
Yeah, yeah.
Well, there you can see it, traders. Nothing happening right now on the charts. I'm actually going to go ahead and kill some of those data I have here, just to see the candles a little bit better, and maybe a little bit of a spring in New Zealand US dollar. We had a bit of a move in New Zealand US dollar. Let's go take a look at CAD because we've just had some CAD data come out. Woo! We got some CAD data coming out, and check out the CAD data. We got unemployment change. That was up 81. We had employment rate. Sorry, unemployment rate. Yep.
How do you go from negative 24 last month to positive 81?
Yeah. Someone's messing up with the data there. But look at the move in the market right here. So definitely weak dollar. Strong Canadian, bearish on the move. Let's take a look and see what it looks like from a weekly perspective because, well, that's it. I mean, look at that. It's got to go bearish because, well, this is real interesting, and maybe this is going to be some sort of education right here. But if you look at the US dollar CAD right now, we're currently broken out of this 14 wedge here. Actually, it's actually a descending triangle. If I take the lows into consideration right here, and it's broken out to the upside, and the market's created this wave 1, wave 3. We just completed a wave 3 over here at the top, and so we're inside the wave 4 consolidation. So we're getting some bearish movement right here. This could be just to come back to retest support right here, and it may be around range bound for the next couple of weeks before we start seeing a breakout and then another dip back down south right here. So I don't see a lot of movement happening on the US dollar CAD. Maybe just a bounce between support and resistance, but other than that, just just sitting at those levels. Then I think one pair that I'd like to look at is the pound CAD, just to see how it's, because we've had some strong. You can see we had some strong pound, and now that we've got some strong Canadian, this should push the pound CAD bearish. I can see that the weekly has definitely, we've had a lot more stronger pound than we've had stronger Canadian, especially that wick down here. I try to push it down, the market pushed it back up again, so we'll see if it maintains. Listen here, if you want to see how strong the pound is, then I think the best option here is to look at the pound Canadian, right? Because if the pound Canadian continues to rally next week, with the good data that we've had today in the Canadian dollar, then you're definitely going to see some stronger pound next week. So this is a good measuring tool, if you want to call it, to determine how strong the pound is ready. Because when you have good data coming out on a pair, but it's not strong enough to push another currency in the opposite direction, that means that currency is definitely holding a lot of strength. What does the chart say with regards to pound and Canadian in strength?
With that currency strength indicator.
Yep. So 830. So we should be able to refresh this and get to 835 update. So here is your CAD jumping on the news. The pound is the green line, so the pound is just kind of shrugging off those. I mean, the pound's been strong all week, but today it shrugged off a little bit of that. Probably some profit taking on the pound. You know, some of those squeezes were covered, so a little bit of profit taking today on pound pairs. We've had, what, 48 hours of solid pound movement, maybe even 72. I think when we had the low on Sunday, Monday with Boris Johnson looking to block Parliament members, and then they turned around and said, look, man, you can't do this without having some type of delay. If there's a no deal, we're not going to settle for that. So it was a complete 180 on pound pairs this week. So anyway, what we're showing right now is CAD is stronger than the pound. If you want a good trade, what has been working well, and this is trades we've been in the flex room, is Aussie Swiss long, New Zealand Swiss long, CAD Swiss long. Those are fantastic, and that's actually exploiting the strongest pairs versus the weakest pair right now. So if you want some trades that have been going well this week, that's definitely the pair. Those are the pairs to be in.
Now, some of those pairs are going to be some sort of correction, because if we've been strong this week, then we may end up seeing some sort of correction between now and the mid part of next week before the market goes ahead and takes off again, right? Now, which pair? Give me one of those pairs that you're talking about, Chris.
Aussie Swiss, New Zealand Swiss, CAD Swiss, any one of those. Those are all, like, Aussie Swiss is at historical lows, 15, 20-year lows.
Okay, cool. That's good. So let's take a look and see what's going on in the. And I'm going to go firstly to the weekly time frame right here. And I love looking at the weekly just to confirm support and resistance. You can take a look over here. Let's see, traders. If anything, this could be consolidation. Now, this could be large consolidation if the market's going to come back all the way back up to the top right here. So we hit bottoms right here. And some of them are saying, well, big dog is in this double bottoms. Well, it's only double bottoms when the market takes out the confirmation point, which is here. So right now, we're in a huge range if the market continues to rally back up again. So we're hitting bottom. Time is start buying. So, Chris, you're right on the money there, dude. Buy. Now, if we go to the lower time frame, when is it time to buy? Well, if I go to the daily time frame first, daily time frame says that we're still bearish overall. All right, look at these red lines. The red lines are indicating the overall trend. The blue lines are indicating the short-term trend right now. So we are moving above the blue lines, which is indicating trend is starting to change in the short term. But we still got a downward long-term trend that, of course, the market's going to hold off. If we break above that, guess what? We're heading back up to the top of the range, and that's good news for traders that want to go ahead and continue to buy along on Aussie Swiss. Now, a lot of range-bound trading right here. We've broken out of it. At least have that distance equal the distance of the breakout, at least for the short term. Then and that could come back and retest the red lines. So we could get the market breaking out of this range, getting up to the red trend lines right here, hitting a bit of resistance there, coming back again, and then we're going to wait to see if we get a breakout of that. So if we get a breakout, that's going to be key. But if I look at my charts and I take the dailies here into consideration and I compress the charts a little bit more, let me see if I can get some more data. All right, so let's see here. Yeah, so if you look over here and I'm compressing a little bit more on the data, I'm just trying to see what data I've got here. Okay, so this is what's going on here. Yep, if we start breaking back up north, this is key. If we start breaking back up north and we start taking out the highs up here at the top, which, by the way, we already have taken out these red lines, the market's heading back up to the top of the range. We are heading back up the top of the range. So this could be a long-term trading opportunity for traders that really want to get in and start taking advantage of this big move going up to the top of the range. And I could go ahead and put in some trend lines. Let's do this and put it up here at the top and say that's the level there that price could go ahead and retest back up again. Now, then if you go to the lower time frame, as Chris was saying, in the short term, some trading opportunities to go in and buy. And we said there could be some correction moves coming in play. Let me go ahead and use my smart waves right here. And so I'm looking at, and I'm going to make adjustments to my wave 1. And I'm going to adjust it up to this point right here. Okay, so we've got wave 3, we completed. Okay, so definitely. So just to give you guys a little bit of insight of what I'm looking at right here. I'm looking at wave 1 right here. I've got my wave 3 right here, which we're expecting price to go ahead and stall at. Yeah, you can see as I draw it across right here, this is definitely going to be our wave 3 right here. So which means traders, we're expecting some dip, but then some rally going back up again. So if the market starts retracing over the next few days going into next week, that's going to create an opportunity for traders to start thinking about going in on new trades, add new positions if you've got current positions holding. But this is going to be a great setup right here on Aussie Swiss Franc. I like it. And in fact, if this trend continues and we start seeing the market continuing with this upside trend, then we could see the market going back up to the top of the range, and you can follow that trend, just buying the dips going long. So that is a good call right there, Chris.
Thank you, sir. Yeah, I just pulled it up on my weekly chart, and the long term is definitely exactly why I'm in at the lows. I mean, I'm looking, minimum would be trying to retest this trend line, which has had resistance, but that's not until around 7,000. If we break that structure, now we're talking, off of lows and lows, we're talking to move all the way back to 78, which is nothing more than large consolidation. But man, what a great level that would be to trade from 6,700 to 7,800, back down, back up. I mean, some of the trades that I get in are definitely long-term oriented, and this is one of them where I think there's no reason for me not to be buying this, and I mean, obviously we've had Swiss franc strength and we've had some scares in the market with risk aversion and trade war concerns, but the market's done a pretty good job of shrugging that stuff off, and this is a great pair to be buying on sale.
Sure.
Let's pull it back to the dollar index right here and take a look at the dollar index again. And if we look at the look here, and I spoke about it in the video that I posted on YouTube, but let's go back to this again. When we look at any sort of rising wedge or falling wedge, it normally hits tops and bottoms of that wedge 5 times before it breaks out. And so with the weakness that we're seeing currently right now in the dollar, the market's going to do this. It's going to come up here. We're going to have one test right here that's going to drop back down here. Now, I don't consider this to be the test right here, although some might say, well, big dog, it did look like it almost tried tested. But I'm going to go ahead and say that this is my third test right here, which means I'm looking for a fourth test down here, maybe another bounce back up to complete the fifth one. Then I'm going to look for the breakout. So overall, I do expect the dollar to continue its weakness. All right, and this may just be a short-term drop with a short-term rally after that before I see a long-term drop on the dollar. If I'm wrong, and hey, it won't be the first time, but if I'm wrong, and this is 1 right here, this is 2, and this is 3 right here, then this is 4. Guess what, traders? If this is 5, if we break out of this trend line like here, we're chasing after the lows down here, which means this just means a big fall in the dollar. So further weakness, strong weakness in the dollar, and that's going to be key right here. So as the market gets to this trend line right here, pay a lot of attention to that, because this could be a hidden fifth wave move that could see the market dropping back down south. I say hidden because of the fact that we didn't quite hit the trend line at the top there, so I'm iffy about whether or not we've hit resistance and the market's going to drop back down. But the good thing right here, traders, is, hey, listen here, me and Chris are on the same page, right? Chris, we're both on the same page. Dollar weakness, definitely. If we see any sort of strong dollar, it's short term, and the market's going to continue to work its way back down south, right?
I agree. And it's just a matter of, so I'm thinking now as we roll into end of the month and get into Q4, if the Fed plays ball and obeys with what the market is kind of anticipating, which is they're expecting a rate cut. I think if the Fed cuts by another 25 basis points, I think it's going to give the market permission to start pricing in dollar weakness, because one thing we have not seen, we've seen it in the yields, right? We've seen it in bonds. We've seen it in the treasury notes. We've seen a ton of weakness that's been priced in on this rate cut. But what happened to the dollar index? What happened to the dollar pairs and Forex? Nothing. We didn't really see any movement in the dollar index, and they cut rates in July. So, we've seen, what happened with Brexit? May was a big trend in the pound because of no deal Brexits and Boris Johnson's rise to prime minister. That was 1,000 plus pips in the pound pair. So the Forex market prices things in well before they happen. In this case, the dollar weakness has not been priced in. So I think that's what's going to help kind of drive this. So if the Fed does cut rates in a couple of weeks and they fall in line with what I think the expectations are, which would be to continue to cut either by 20, probably I would think 25 basis points. I don't think Jerome Powell is going to be super dovish and all of a sudden, throw out like a 50 basis point cut. I would be really surprised to see that. But I think steadily, maybe 25 basis points here, maybe another 25 basis points end of the year, and then they see where they get us by December. Again, is that to the market's liking? Doesn't really matter. I think we still look at the charts and the technicals. Gary and I still see the same thing. So it's like, regardless of what happens with the Fed, I think if we're prepared for it mentally and we're looking at the charts, that's how we need to trade it.
Absolutely. Now, Chris, we're watching the news right here, and I'm going back to the the hourly charts just to see if there's any change. And it looks like no pound starting to bounce off this the signal line right here, and we should see it continue up. The only thing right here that bothers me a little bit about the pound. Hey, listen here, I'm all game. I'm all game for a strong pound US dollar, right? Because I've got money in the pound US dollar going long. But the thing is here, if I look at the chart right here, the market came back with a very shallow retracement right here on this wave 2. And I normally expect a deeper retracement than that. So when the market goes up a little higher here, you know, I'm reluctant to want to go ahead and buy in at this point because I'm expecting price to come back down and go into a deeper wave 2 before we go back up again. So this is never going to be my area to buy. So I can't even say to you, hey traders, let's go ahead and jump in on this trade and start looking for buying opportunities. Because me as a trader would probably be not too happy about jumping in on that. But this is the deal. You know, risk versus reward, right? You take a little bit more risk, you get a lot more reward. Now, this is how you trade it. If this candle closes out, which is the 1 hour candle, if it closes out bullish, then buying in at that point, putting your stop loss tight below this level right here, looking for a rally up. We're probably going to get to about that level there, but looking to put your stop very tight. The risk reward ratio on this trade would be something like, let's see here. I mean, we're looking at a 30 pip stop, maybe 40 pip stop, and the profit potential is about 140. So you're looking at between, let's say, 35 pip stop with 140 pip gain. That's a 1 to 4 risk reward ratio. You see how the risk reward ratio is important, and how this becomes a risky trade, but because of the risk reward ratio, I mean, I'm game for a 1 to 4 risk reward ratio any day. If I can get that, put some money on the table and get a 1 to 4, it's good. But the only thing, traders, that, and I'm going to just be real with you, the only thing that I'm concerned about is that the fact that we've come up a very shallow retracement, and deeper correction is what I'm anticipating before the market moves back up north. So I would rather be looking to buy as the market takes out that low, look to buy down here once I get the signals, rather than to enter at this level right here. But I know we got we got a lot of big scalpers out there, big traders out there who like to go in with quick in and out trades. That will probably be a trading opportunity coming up this morning if it closes out bullish by the close at 9 o'clock, which is in the next 11 minutes. I'm not sure that's going to happen. We have to wait and see. Data's been very choppy. Data's been very choppy today. You can see here, this is the 1 hour time frame. I can zoom in a little bit more on that. And you can see the data's been very choppy. Take a look at the chart right here. Very choppy. You know, it's just not giving any directional bias at the moment right now. Chris, I think the fact that the non-farm payroll wasn't a big hit today, what is your prediction on a pair that you're focusing on? Just give me one currency pair. I'm going to look at the Euro Aussie. I'm going to go ahead because I've got a prediction on the Euro Aussie, but I want you to go ahead and pull out the pair that you've got your eyes on. I know you're into the Aussie New Zealand dollar big time, but is there any other pair that you've got your eye on that you could go ahead and share with the students today?
Yeah, well, I'm curious what your thoughts are on the Euro Swiss. That's another one that I've been in. So, I mean, a lot of it is, you know, I said earlier, commodity pairs that are doing well for me, Aussie Swiss, New Zealand Swiss, CAD Swiss, but Euro Swiss to me is another medium-term position that I've been building up, and it's going well. We finally had a nice turning point. I still see that French election gap at 107.20, 107.50. But I'm looking for a U-turn to the upside and at least a correction towards, you know, possibly 112, 114. And knowing that long term we should have a safer play to be a bull on this trade. Okay, well this trade is complicated. And what makes it so complicated is this big move that we had, that Swiss franc flash crash we had right here when the Swiss unpegged against the euro. That right there is really messed up the charts from a long-term perspective. But if you actually take a look at the details here, we do have a nice little trend line going up right here that the market's broken through. So if I go ahead and ignore the flash crash, we did see a bullish channel. We've broken through the bullish channel, which means that the market's hit highs and we're starting to trend back down south, right? So I'm always looking at this, Chris, from a wave perspective, and I'm going to say that we're currently right now, oops, and I'm going to put that in, which I shouldn't be. All right, so there we go. So what I'm going to do now is I'm going to zoom in on the chart right here. I got a wave 1, 2, and now 3. So we've hit a wave 3. So Chris, I'm going to say that if I was going to trade this,
which, by the way, I was a few months ago. I had to kill some of my positions, but I was a buyer on this when the market was dropping because I was trading the counter trading strategy. But the deal is this: we're hitting bottom right now. We can see that we're getting a lot of confirmation here at the bottom with candles. Here is a wave one. Price is going to come back up and try and retest that, but this support's going to hold it from getting up a little higher. So which means that we're going to go ahead and retrace back up to this level. Now, what is that in fibs? Let me put my fibs down here, because take it from the top here and drop it down here. Check that out, 382. So we're going to get back on. We're going to get back to a 382 retracement. All right, the market's going to get to a 382. So you could see that we could exactly like it drew over here. This is the 382 right here. Price is going to move up to the 382, and then we're going to turn around and we're going to head further down south. So price is going to continue to move down south, but not until we have this retracement. So if you're buying, are you buying right now, Chris?
Of course I am.
Oh, of course Chris is buying. All right, so Chris, you're in a great position right now. I would be a buyer on this. Let's go take a look at the daily. Now we in the trading room, in my trading room, Chris, we look at the daily time frame for confirmation. And if I look at the daily time frame right here, I'm not seeing. Hold on, my bad. Okay, hold on. I got to compress this a little bit more. So let's compress this a little bit right here. And what I want to do is I want to see if I've got my lows and highs. All right, there it is. There. I'm going to open it up a little bit more. Okay, so there we go. That's too much. So we've got a little bit of consolidation, but it looks like we're starting to break out of that. I do have a bullish candle down here below, which means traders going to start thinking about buying in. There it is there. That candle there, that was yesterday's close. Yesterday's close says, yep, we're buying. So we do have a buying opportunity. If I go to the 8 hour and take a look at the 8 hour right here, we had an early buy down here. Once the market hit the third wave, there was the early buy right about here. So there was the early buy right there to start buying in already. So Chris, I think you are hot with your trade there, buddy.
Thank you, sir. Yeah, I was. So it's interesting that you're looking at that fifth wave to the downside. So I think what will probably be my plan is once we get up towards 1100 to 1150, I'll probably book the profits, and then I'll wait for that low at 107.20 and see if that French election gap does get filled, and I'll buy it again. But medium long term, I'm bullish on this pair overall.
All right. Very good. Now I like that. I like the deal. Now I had I want your views on this as well, Chris, because I've been looking at the Euro Aussie dollar. Listen here. I don't know if anyone has seen the prediction that I posted on the Euro Aussie dollar. I posted a Euro Aussie dollar prediction, and I said Euro Aussie dollar is going to start falling. We spoke about 2,700 pips. All right, and that 2,700 pips came from this actual low right here. See the low down here at 136.68. Let's go ahead and show you what it looks like. Looks like my camera's gone down on me. But here it is here, 136.68. Now that 136.68 is the low that I'm anticipating price to move down to. So that's a 2,700 pip opportunity. 2,700 pip opportunity. The question here is, where do traders get in? Well, we spoke about where to get in on this trade, and we said let's start selling it right at the top there. We started selling right at the top. And the market's going to continue to dip down south. If you take a look at the 1 hour, look at the 1 hour right here. The 1 hour is showing us that price, and I believe, I'm almost saying a song right now. I believe I can fly. All right, there it is. Yeah. Okay. So we've got a trade right here. That's going to round about, what is that price level? Let's take a look at the price level here. We're looking at about 160.13. So 160.13 is where my third wave target is. So we could see price moving further down south. 113, that'll be a short-term target. Sorry, actually 160.13. Yeah. So 160.13 will be my short-term target. Price is currently trading at what? 161.33. We got about another 100 pips to the downside, but I'm still very confident about the market moving further down south. But if I go back to the weekly, let's take a look here on the weekly. This is going to be obviously when the price gets to this level right here. This is the upward trend line. When price gets to the upward trend line, at that point we're going to start thinking about protecting our position. taking some money off the table because we're probably going to complete a 5-wave sequence going down right here. So take profit off the table, wait for a little bit of a bounce, and then look for that breakout. When that breakout takes, traders, that's huge pips to the downside. And sure, we'll get a bit of support coming off these lows right here. That's going to support the market, but we're going to see the market dropping even further on the Euro Aussie dollar. I'll probably send an update next week on the Euro Aussie for new trading opportunities for those that are in on those trades, or at least monitoring it, because I think we're going to see some further downside move on that. And I also, and I'm going to just jump in here, Chris, again, is on the pound New Zealand dollar. Pound New Zealand dollar. Pound New Zealand dollar, I had a prediction. I said bearish on pound New Zealand dollar, and it was based off this resistance right here. I'll send a new update on that. I'm expecting pound New Zealand dollar to dip down south to this level right here. And I always said if we get any good data or bad data out in the US, the pound New Zealand dollar normally reacts accordingly. In fact, anytime we have bad data in the US, then the market tends to go ahead and drop the pound. For a strange reason, Chris, pound New Zealand dollar always seems to follow the weakness or strength of the dollar. It's happened to me too many times, and we've seen it today, actually today's trading as well. We've seen how the market actually created this weakness in the pound, and yet, not the pound, the US dollar, and yet the pound New Zealand dollar is starting to fall again. Did you see that? Was it just me?
No, I see it. So it's interesting, pound New Zealand, pound Aussie. I like selling on both of those currency pairs. I just think for the safety side of things, I'm just on the sidelines. I'm probably not going to be overly aggressive. I have been talking to traders about the London daybreak strategy. This week has actually been a really profitable week with the London daybreak strategy. Just looking at it, it wasn't a lot of movement today, but Monday, Tuesday, Wednesday, Thursday, like every day at 3 a.m., you've got a big pop and you've got 50 to 100 pips on those candles. To go back to your Euro Aussie, what I really like about this trade is imagine your Euro Aussie trade and then flip that upside down and make that the Aussie Swiss trade. You're looking at a long-term Euro Aussie. If we break that rising wedge, I'm looking at a long-term Aussie Swiss. So I think you can be profitable on both pairs.
Yeah, absolutely.
And so on that note, it's interesting. So Euro Aussie, when we had that gap over the weekend, do you remember that kind of vicious gap on Aussie pairs and yen pairs over the weekend? So we were filled at a top on the Euro New Zealand, and we had a pending sell on the Euro Aussie at the top, and it just missed us by a few pips. You can see on my chart here, it might have been like a 20 to 30 pip miss. So the reality for me on this trade was I was already short. We missed that by about, looks like 50 to 60 pips on that wick. Nevertheless, if we got filled in that position, we would have been closing up trades for about 600 pips today. The reality was I was a break even at 62.30. I ended up closing out for minus 15 just to get out of the position, because for me, it was a better trade if both entries got filled. Today, I closed for 100 net pips on Euro New Zealand. I'm right there with you. We're having this move down. I think that this will create another bounce, but the open space that we really want to be trading and focused in on, especially deploying some robots, would be on the right side of that wedge. If we break that wedge and get into open space, then that's a huge trade. I think you can unleash, a lot of systems on this area to get some decent trends.
Yep. And I'm just looking at my trades right now. My phone is speaking right now, and I'm definitely getting the movement that I expected on both Euro Aussie as well as on pound New Zealand dollar. I got a little worried yesterday in my trading room, Chris. Yesterday on the pound New Zealand dollar, I got a little worried. I was like, man, I don't know about this pair so much. It may go ahead and reverse on us, but it looks like it's turning out to be a reasonably good trade. Now, I'll be honest with you. If I can flip back to that chart, and let's go back to the chart here, and I'm still not completely out of the woods though, and maybe I can get some of your opinion on this as well. But looking at I know that you like a little iffy about this particular pair, but I'm looking at the 8 hour. The 8 hour says bearish, right? 8 hour says okay, we've confirmed bearish, but there is a bit of consolidation here in this section right here. But now if I go to the daily chart right here and open up the daily chart is currently bullish. You see here. Now this is the thing that I'm concerned about. If we don't break below this wave tunnel right here, this red line right here, if I don't break below that, and it stalls here again, because this is the consolidation I saw in the 8-hour. If it doesn't break below here, I may just go ahead and just get the heck out of Dodge. But if we continue to see the weakness that we're seeing right now throughout the day, and this continues to dip south, because my stop loss is just here. I'm short currently in pound New Zealand. I'm going to stop just above right here. If we continue to see the market dropping down south, then I'm going to say that this pair right here is going to break through the support level, and we could get down to the lows down here. I mean, this could be a huge drop on the pound New Zealand dollar. So I am committed to the sell, but I'm not 100% committed if it doesn't break through that support level. What do you think, Chris?
I think you're spot on with that, and you know, I've done a little bit simpler approach. I mean, I think that if you look at a daily, weekly chart, you know, I'm trying to be a little bit more conservative. But like this highs, if you connect the highs, they have nice, you know, lower highs, higher lows. I see the same pattern on the Euro New Zealand. If I do the same type of setup on the Euro New Zealand, you know, connect the dots right in here. Actually, I need to go back further on the weekly chart. I think that because this goes back to like 2015. Yeah, it's way back here. So this high from 2015, and then we can connect the lows over here. So I mean, I really see that we could just have a bigger wedge forming on Euro New Zealand and Pound New Zealand. But I agree, if you have that stop area, I mean, that would definitely be the point where if it goes higher, Pound New Zealand, you know, what I mean, kind of like to see happen is, and this is not against your trade at all, but I'm looking for this to just break the trend line, you know. And again, if it's a little bit clearer outside the right side of this trend line, then we can probably take some trades. What I would look for is if we break this trend line, you know, I will probably look for a trend line break over here or an equal top that I can have a tight stop and trade that on the right side of the trend line. The other case would be I put a pending sell way up here at 2.0, which was the high that we ended up selling it at. We sold it, you know, up at this high. We rode it up a little bit for a drawdown, then got back in and took this thing way down in May and made a lot of pips actually back down there towards those lows. But this to me it's just kind of corrective. I mean, I see if you connect the highs that way and connect the lows, you know, you're right there where if this is where you're going to get out, I think that's a smart play, because if it does cooperate here, this certainly looks a lot better for a sell. But I mean, if it goes higher, I mean, this channel can still remain choppy, and possibly even revisit this 2000 high. And then I'd still look for the downward. I think, you know, medium term, long term, this is still a sell trade.
Yeah. Well, I've got it in for a sell. We'll see what it does at that support level there and make a decision as to what we're going to do on that trade. Hey, listen here, guys. I think we were out of time here, Chris. So I'm going to go ahead and just do my close here. Thank you for coming in. I really appreciate everyone. News didn't really disrupt the market too much. We saw sort of a bearish. I'm killing my mic here. We saw a bit of a bearish move on the dollar, but it wasn't a huge move on the other currency pairs. It's probably going to take most of the day to go ahead and play out. I think we've seen a lot of the weakness that's taken place in the dollar and seen a lot of strength in the pound this week. That's probably going to go ahead and play out for the rest of the day pretty neutral. But then starting next week is going to be key. And why is that? Well, because a lot of the movement that we had this week has set up great support and resistance levels on the pairs. If you look at the weekly time frames and see how the weeklies closed out, they are creating support and resistance levels for us to now take opportunities in that direction. We had a trader that just posted, why does it take so long to make 300 pips and it takes a day to lose, or a very short time to lose 300 pips? So it's taking longer to make 300 pips, but it's taking shorter to lose 300 pips. I get that. And the most of the time is because we either tied up inside consolidation. Remember, some traders, consolidation happens 70% of the time. And that's where traders lose the most, inside consolidation. So when you lose 300 pips, you can lose 300 pips very quickly if you tied up inside consolidation, you're trying to buy and sell in that range, and you keep taking up some losses. And also, if you trade it in the wrong direction. Clearly, if you trade in the wrong direction, it's going to take a very quick time for you to be able to lose 300 pips. But if you pick the right direction and you pick the timing right, that you're out of consolidation and the market's actually now trending, that's where you're going to pick up quick pips and you're going to make good money. So pick your timing, make sure that you're not trading inside consolidation. That's important to be able to make quick money without losing quick money. All right, Chris, over to you.
And be patient because you know, big wins will come. I mean, if you've been with me for the last month in my trading room, we didn't really have a lot of activity in August. We took very few trades in August. We've been sitting on trades like right now, Aussie Swiss, CAD Swiss, New Zealand Swiss. Now everybody wants to be in those trades because they look so good, but we've been patiently waiting for those to turn, and it's happening now. So dollars are starting to show some signs of breaking out. Yens are showing more promise. The stock market's cooperating with the melt up through probably the rest of this month. We'll see, of course, what the ECB brings to the table next week. We have ECB rate decision on Thursday, and I'll actually be running a live session of that through my trading room. And then we have the Fed 2 weeks after that. Gary, if you want to do possibly a tag team on the FOMC on that Wednesday afternoon, if we can do that together, that'd be a lot of fun.
Absolutely, absolutely. Hey, listen here, guys, before you guys go, just to make sure you follow Chris on his Facebook page, on his YouTube channel. Chris, if you haven't posted already, post your YouTube channel. I've posted my YouTube channel. Look for me on as FX Big Dog on Facebook, Twitter, Instagram. FX Big Dog. Make sure you find me, follow me. The YouTube channel, I post videos on a regular basis. Chris is doing the same thing. You want to go ahead and follow us on YouTube. Subscribe to our channels. Get involved, traders. Connect with us because we want to connect with you. All right, we're doing this for a reason because we're trying to reach out to you, connect with you, give you guys information, keep you in the loop as to what's going on in the marketplace. Hey, this stuff right here is interesting. Didn't have a lot of movement in today's trading, but you know what? We learned a little bit. We gained a little bit of access to some information, and that is useful for any trader. It doesn't matter if you're a starter trader or an advanced seasonal trader. It's good information to be able to grab this information. Listen here, I'm going to say cheers. Chris's details are down here. You can see Chris has gone ahead and posted these details. Make sure you get access to his social media. Connect with Chris, and we'll see you guys in the next video. And I think when's the next video, Chris?
Well, this one's going to be recorded. We'll get this out to everyone. We can send this out through the online university and get this out there through our social media outlets. And I know Gary and I will probably team up again for sure during FOMC. If we can put something together maybe next week and do some tag team videos, we'll certainly do that. So this is becoming a much more frequent thing, and we love everybody coming in to check it out. So it's a lot of fun.
Absolutely. Absolutely. Guys, from me to Chris, have a good time. See you guys. Thanks for joining us.
Take care, everybody. Bye.